Question number 24. Question number 24. Write down MRQ, must revise question. Must revise question before exam. Till now not asked but can be asked in exam. And when this will be asked, most of the students will do wrong if you are not revising before exam. So there are some questions which require revision before exam. Even though you have understood. Even though you have understood. Okay. An entity has a nuclear power plant and a related decommissioning liability. The nuclear power plant started operating on 1st April 2001. Start drawing timeline. The plant has a useful life of 40 years. 40 years. Its initial cost was rupees 1,20,000. Initial cost they have given 1,20,000. This included an amount for this decommissioning cost of rupees 2,000. This included an amount. So 1,20,000 is inclusive of 10,000. Thank you very much. Thank you very much. So they have given cost. So this included an amount for decommissioning cost of rupees 10,000, which represent rupees 70,400 in estimated cash flow payable in 40 years discounted at risk adjusted rate of 5%. So it means present value of 70,400 at a rate of 5% for 40 years will be 10,000. It means okay sir. Means this information is actually not important now because they have given what? Present value. Only we want rate of interest for calculation of interest. Yes sir. The entity's financial year end on 31st March. Okay sir. Okay sir, they have given year end. Thank you. Assume that market based discounted cash flow valuation of rupees 1,15,000 is obtained on 31st March 2004. Assume that a market based discounted cash flow valuation is obtained on 31st March 2004. So can I say they have done some valuation on 31st March 2004? Means you need to understand what is the information given. So from that information it is understood that some valuation has been done on 31st March 2004. So why they have that? Why they require valuation? What was the why valuation is required? For revaluation means this information has been given to find out fair value for revaluation model. Means one of the method to find out fair value is discounted cash flow. And discounted cash flow this will do under IND AS 113. Understood? Correct? So they have given, assume that market based discounted cash flow valuation, market based. Already I have said fair value is based on market condition. So from this also you can understand that this is for fair value measurement. It means 1,15,000 is fair value. Yes. This valuation is after deduction of an allowance of rupees 11,600 for decommissioning cost, which represent no changes to the original estimate after the unwinding of 3-year discount. Have you understood this point? This entire sentence you have understood? Bolo. English. Have you understood? Just try to understand. Can I say I am here to give you the concept of India? I am not here to give you the understanding ki how to interpret English language. Means can I say you should become expert in understanding the information given in question. For a particular question I can read and I can explain you, but I don't know which question is going to come in your exam. Means I can explain this you right now, and if you are understanding only by my explanation what will happen in exam hall, because in exam hall the information may be changed. अरे बोलना रे. It means you need to understand the information given the question by your own, and if you are not able to understand you should require help. Then only I am there for you to help you. So first you think what you are understanding, then I will explain. And if my explanation and your understanding matching means both are chartered accountant. And if my understanding, my explanation, your understanding is not matching, then also both are chartered accountant. Because as a student, if I am also reading, it might happen I am also not able to interpret as a student. Understood whatever I am saying? So don't worry if you are not able to understand the information. Correct? But you need to understand by your own. I am reading the other part. Correct? On 31st March 2005, so you can see fair value was missed. Revaluation was done on 31st March 2004. Then after 1 year, on 31st March 2005, entity estimated as a result of technological advances the present value of decommissioning liability has decreased by 5,000. Oh, what is the meaning? What is this? This changes in what DRSL? Changes in DRSL. In this question, the entity has opted revaluation model. Super question. Super question. This question means entire India's 16 understanding is required. Correct? The entity decided that full valuation of the asset is needed at 31st March 2005, means once again valuation is required, means subsequent revaluation. So on 31st March 2005, subsequent revaluation, in order to ensure that carrying amount does not differ materially from fair value. Okay, sir. The asset is now valued at 1,07,000, which is net of an allowance for the reduced decommissioning obligation. Net of an allowance. So you need to understand this also. What is the meaning of this? Correct? How the entity will account for the above changes in decommissioning liability, if they adopt revaluation model. Of course, they have adopted revaluation model. Means, can I say, even though they have not given, they have adopted revaluation model, you will assume they have adopted revaluation model because they have given the information of fair value. It might happen if they have given the information of fair value, but at the end they have written they have adopted cost model, means whatever information given about fair value is bakwas information. Correct now? But they will not do like that. If they are giving fair value information, if they want you to adopt what? Revaluation model. Now, have you drawn timeline? Have you drawn timeline? Or you are only listening? Can we draw now? So you need to help me. So what is the first date? 1st April 2001. This date is very important to understand the question. Initial cost is what? 1,20,000. And this includes what? DRSL how much? 10,000. What is the rate of interest for discounting? How much? 5%. Correct? This information we are given. Okay, sir? Correct. Then that present value, that 70,400 is not required. That information is not required. If you want to write down. That is your choice. Then first revaluation was done on 31st March 2005. Means 4. 4. So this is how many year? How many year? 3 years. 3 years. 3 years. So can you see here they have calculated fair value, and fair value how much given? Fair value how much given? It is given 1,15,000. 1,15,000 na? 1,15,000. Then there was one sentence which you have not understood that we need to understand. Correct? I will wait for that because I will ask from you what needs to be done. Then again on 31st March 2005, correct? Means initially there was DRSL of how much? 10,000. And you are it is given that on 31st March 2004 there was no change in the estimation, but on 31st March 2005 it was decreased by what? 5,000. It was decreased by 5,000. Correct? It was decreased by 5,000. Means, can I say no change? Means, can I say the carrying amount of DRSL will be calculated by applying rate of interest 5%? So can you give me what will be the carrying amount as on this date? It will be 10,000 into what? 1.05 to the power 3. To the power 3. How much it is given? 11,576. 6, but in solution they have taken approximate figure 600. Can I take 600 to match with the solution? In exam you can take 11,576 whatever is coming, because in exam how you will know that we require approximation. But to match with the suggested solution I have done approximation. Chalega? Chalega? Chalega. So 11,600. So can I say carrying amount is 11,600, or can I say 11,600 is nothing but, it is nothing but present value of remaining cash outflow, present value of cash outflow, present value of cash outflow at the end of how many years? At the end of how many years? 37 years, like 40 year not. At the end of 37 year at this point of time, can you say 11,600 is nothing but present value of cash outflow which will be happened at the end of useful life. So now at the end of useful life is after 37 years, 3 years is expired. Are you able to understand? Correct? This much information was given. Acha, one fair value. Here fair value is given how much? 1 lakh 7,000. 1 lakh 7,000. This all information you have written. If you have written this information, then only now you need to go to that point which was thoda sa complicated. Okay, this all point was easily understandable. Are bolna re. These all points were easily understandable. Now, if you want to give time, you need to give time only in 2 sentences. If you understand that 2 sentences, this question is very easy. If you are not able to understand, whatever you understood, that much you do. Just try to understand whatever you have understood, that much you do. Means you need to attempt this question even if you are not understood one information. Whatever you are attempting, you are getting marks for that. And 1 marks, 2 marks, 3 marks is also important for passing the examination. If you are leaving the entire question, you are getting 0. Got it? Now, the special point. This valuation is after deduction of an allowance of 11,600. Oh, 11,600 calculated. Understood? Correct? So this valuation is after deduction of an allowance of 11,600 for decommissioning cost, which represent no change to the original estimate after unwinding of 3-year discount. That only we have done. We have done unwinding of 10,000 and that become 11,600. That become 11,600. Now you need to inform what need to be done. Why this? What is the info? What is the explanation of that sentence? So before break, we were discussing question number 24. I hope whatever we have written that you have understood. Only one point require explanation. That was what this particular point. Which particular point? This valuation means 1,15,000. This valuation means 1,50,000 is after deduction of an allowance of 11,600 for decommissioning cost, which represent no changes to the original estimate after the one unwinding of 3-year discount. So now I hope once I have written all the information, you have understood that this 1,15,000 is after deducting what? 11,600 is after deducting 11,600. So you understood what is the importance of writing all the information. Means initially when I have read, so that time I hope you might not have understood what is the relevance of that point. But once I have written all the amount, all the figures, you might correlate this 1,15,000 with 11,600. Correct? Now, why they have given this point? That I need to explain. So what they have said, this fair value is the present value of cash flows, discounted cash flow. Na, you can see this valuation is what they have given. Assume that market based discounted cash flow means 1,15,000 is present value of future cash flow. Future cash flow means what? Future cash flow which will be generated from the use of the asset. Means this present value of cash flow, which cash flow which will be generated from the use of the asset. Correct? Now for example, from this classroom is one group of assets. So what is the fair value of this group of assets? If I want to find out, so I will find out that this will be used for 5 years. and in 5 years I will be having this number of batch. In this number of batch I will have this number of student. From this number of student my cash flows will be this much. So we can estimate the cash flow from the use of such asset. We can estimate the cash flow from the use of such asset. बोलना yes or no? So that is the discounted cash flow, and this cash flow is nothing but cash inflow from the use of such asset, and this will be deducted with cash outflow, and one of the cash outflow will be this disposal cost, means dismantling cost. Understood? Once again what I am saying, present value of cash flows. So cash flows means what? Cash inflow minus cash outflow. Cash inflow means whatever income we are generating from the use of that asset, and cash outflow, one of the cash outflow from the use of that asset is dismantling cost which will be incurred at the end of useful life. So you can see cash outflow is deducted from cash inflow. So this 1,15,000 is after deducting what? Dismantling cost. Dismantling cost. And can I say after deducting means deduction of present value? Deduction of present value now. So if I am taking present value of cash inflow, so of course I will take present value of cash outflow. So present value of cash outflow, present value of cash outflow. So this is the present value of cash outflow at the end of year 37, and that is nothing but 11,600. This 11,600 is deducted from 1,15,000. I have said somewhere that this dismantling cost is the cost of disposal. Means this 11,600 is what? Cost of disposal, means cost to sell. Means can I say this is one cost to sell? Bole yes or no? Means this dismantling cost is incurred to dispose of the asset. This dismantling cost is incurred to dispose of the asset. So can I say if 1,15,000 is after deducting 11,600? One second, just try to understand whatever I am saying. If 1,15,000 is after deducting 11,600, my question to you all, this is fair value or fair value less cost to sell? Fair value less cost to sell, and this is the concept. But we do revaluation at fair value or fair value less cost to sell? Fair value. So whether revaluation will be done at 1,15,000, 1,15,000 minus 11,600, 1,15,000 plus 11,600. Understood the concept? Once you understand the information, then only you can apply the information to the concept. So there are two major points to pass the exam. First, understand the question, then relate the concept with the information given the question, then only you can write down the answer. Means can I say this is not fair value, this is fair value less cost to sell? Oh, अच्छा, ये बात. Understood. And we know we do revaluation at fair value, not fair value less cost to sell. Got it? It means can I say fair value will be equal to 1,15,000 plus 11,600 plus 11,600. How much? 1,26,600. Similarly, they have given the same point for this 1,07,000. What they have said, check करेंगे. They have said the asset is now valued at 1,07,000, which is net of an allowance for the reduced decommissioning obligation. Means, can I say they have given decrease in liability, but we don't know after decrease in liability what is the carrying amount. So that become reduced decommissioning liability. So after decrease that become reduced decommissioning liability, and this 1,07,000 is after deducting reduced decommissioning liability. So can I say this is also fair value less cost to sell? So if you know what is the reduced decommissioning liability and if you have added to 1,07,000, you will get what? Fair value. Understood? Have you understood this point? Correct. Means this 1,15,000, 1,07,000 is not fair value, it is fair value less cost to sell. And for revaluation we want fair value. This was only the point which need to be explained by me from this question point of view. Otherwise, all the information you would have understood by you. Can we do the solution? Bolo. Can we start? Let us start. First we want carrying amount of the asset as on 31st March 2005. We want carrying amount na. Write down. Calculation of carrying amount of nuclear plant as per which model? Revaluation model as on which date? 31st March 2005. 2005, 2004, 2005 both na. So if you are calculating for 2005, automatically 2004 will be calculated. Correct na? We will start with initial cost. They have given initial cost. How much? 1,20,000. It already include initial estimated cost of dismantling, etc. Nothing to add once again. Correct. Then minus accumulated depreciation for how many years? First you will calculate carrying amount as on the date of first revaluation. Means first you need to charge depreciation for the first 3 years. So accumulated depreciation up to which date? 31st March 2004. So before revaluation you need to charge entire depreciation. Correct. First calculate carrying amount on the date of revaluation. Carrying amount is after depreciation. Correct. So this will be 1,20,000 minus 0 divided by 40 into 3. How much? 12,000. 9,000. So this become carrying amount as on 31st March 2004. Can I see this is before revaluation? Before revaluation, that is how much? 1,11,000. Now I'll compare with fair value. Fair value is what? 1,26,600. 1,26,600. There is an upward revaluation. There is an upward revaluation now. So plus upward revaluation. Can I say upward revaluation will be credited to what? Credited to OCI as revaluation surplus. So can I say after this the fair value will become what? Fair value as on 31st March 2004, because revaluation is done at the end of the year. Correct now? As on 31st March 2004, it will be 1,26,600, which is nothing but 1 lakh. How much given? 1,15,000 plus 11,600. So what is the upward revaluation? 15,600. This is upward revaluation. Correct. Now we'll calculate subsequent depreciation because we want carrying amount as on 31st March 2005. Subsequent depreciation. Subsequent depreciation of which year? 2004, 2005. Correct. So depreciation for only 1 year, it will be 1,26,600 divided by remaining useful life 37 into 1. How much? 3420. Can we take 20? 3420. Rounding off. So this become carrying amount of PP or nuclear plant as on 31st March 2005. Before what? Once again before revaluation. Before revaluation it is 1,23,000 180. Correct. Then we'll do plus minus upward or downward revaluation. So what is the fair value? Fair value. We need to find out fair value. Correct now. So how to find out fair value? Check करेंगे. Can you give me what will be the fair value as on this date? If you can give me the fair value, means you understood the entire emotions of this question. Only one thing I have not calculated. What is the fair value? For fair value, you want what? Reduce decommissioning liability. Let's see whether you can do it or not. Do rough calculation. If you can give me reduce decommissioning liability, it means you have understood. Bolo. 7,000. Everyone getting 7,180? Correct. Very good. It means can I say 11,600? First you'll add interest. Interest what? 1.05. How much you are getting? 11,600 into 1.05. How much? 12. Or can we take 12 to the 12,200? Because in suggested solution they have done rounding off. In exam you can take 180, nothing to worry. But I am just taking the numbers what is given in solution. Okay, 12,200. Now reduce by what? 5,000. So it becomes 7,200. So 7,200 is the reduced decommissioning liability. Means this is the present value of cash outflow at the end of how many years? 36 year now. Correct now. So this will be deducted from what? This will be added to what? This 7,200. So what is the fair value? It is 1,14,200. 1,14,200. Understood. So now fair value as on 31st March 2005 become 1,14,200. Correct? Carrying amount is 1,23,180. So bata upward or downward revaluation? Upward or downward revaluation? Downward revaluation. Carrying amount is more than fair value. Downward revaluation. Correct now. So we will reduce the carrying amount. So write down minus downward revaluation. Downward revaluation by what amount? Means from 1,23,180 deduct what? 1,14,200. So it will be 8980. 8980. Correct now, because then only it will become how much? Payable is what? 1,14,200 na? Correct. So downward revaluation is 8980. This will be debited to what? This will be debited to OCI to the extent of revaluation surplus available. So you can see how much revaluation surplus we have. 15,600. Sufficient we have. So can I say this will be debited to what? Debited to OCI. Revaluation surplus. And this become fair value, or you can say carrying amount as on 31st March 2005 after revaluation. After revaluation. Got it. Then point number 2. Can you see we also require carrying amount of decommissioning liability. Correct. Already we calculated, but we need to write down properly. Calculation of carrying amount of decommissioning liability. Can you see this we are calculating as per Ind AS 37? As per Ind AS 37. Correct. What is the initial estimation? Initial estimated liability, how much? 10,000. In this we'll add interest expense, interest expense, correct now. So interest expense of how many year? 3 year we need to add, correct? So either you can do like this, 10,000 into 1.05 to the power 3. The total is 1,600. Okay, this interest expense were debited to PL of respective year. Debited to PL of respective year. Understood that I am not writing. So this become 11,600. So this is carrying amount as on which date? As on 31st March 2004. Then once again interest expense of which year? 2004, 2005. Can I say this will be debited to PL? Debited to PL. So this is 11,600 multiplied by 1 point, means I should not write down 1.05, no? I should write down 5% because we are calculating interest. Into 5%, how much? It is 600, na? Approximately 600, correct? So this become what? 11,000, sorry, it become 12,200. So this is carrying amount before reduction, better. From this now we'll deduct what? Decrease in liability. So from these, right, minus what? Decrease in liability due to what? Changes in DRSL, due to changes in estimation. So 5,000 reduced. But this decrease in liability will be gain. So this will be created to what? Created to what? This decrease in liability is a gain. So gain will be created to what? Because we have opted for revaluation model, so it will be created to OCI as a revaluation surplus. This changes in DRSL concept, na? So it will be credited to OCI as revaluation surplus, and this become carrying amount of decommissioning liability as on 31st March 2005. That is how much? 7,200. Correct? Understood? Point number 3. What will be the accounting treatment? Accounting treatment. Correct? First, for 31st March 2004. 31st March 2004. Correct? So for 31st March 2004, point number 1, for upward revaluation. Upward revaluation. Correct? So can I say for upward revaluation, first we need to eliminate the entire accounting depreciation, accumulated depreciation. Always whenever question is silent, use technique 1. Use technique 1. Correct? So first journal entry will be what? Accumulated depreciation account debit to property, plant and equipment, or you can write on nuclear plant. How much? 9,000 will be eliminated. And then second journal entry will be what? Nuclear plant account debited to OCI as revaluation surplus. So it is 15,600. 15,600. So I'm just passing the journal entry of revaluation. I'm not passing journal entry of depreciation and interest expense. That is understood. Correct? If you want to pass that journal entry, that also you can pass. Then on 31st March 2005, can I say first there is a downward revaluation? So for downward revaluation, for downward revaluation, 1 second downward revaluation, so you need to eliminate first accumulated depreciation. Correct now. So what will be the amount of accumulated depreciation as on 31st March 2005? Batao. It is only the depreciation of fourth year. Depreciation of fourth year. Only the depreciation of fourth year. What was depreciation of fourth year? It is how much? 3420. So we'll do accumulated depreciation account debit to nuclear plant. It is 3420. 3420. Now we'll do downward revaluation journal entry. So the downward revaluation will be debited to OCI. So what journal entry? OCI revaluation surplus account debit to what? Nuclear plant. How much? It is 8980. 8980. Then there is one more journal entry for reduction of DRSL. There is a decrease in liability. So for decrease in DRSL, decommissioning liability. So decrease in DRSL, that will be also credited to OCI as revaluation surplus because we opted for revaluation model. What journal entry will do? Provision for decommissioning liability account debit to OCI revaluation surplus. The amount is 5,000. The amount is 5,000. Understood? Correct? Have you got it? Correct? Now we'll prepare extract of balance sheet. Point number 5. Now, sir, why you are doing so? Just try to understand. They say how the entity will account for above changes for decommissioning liability if it adopt revaluation model. So normally from the requirement of question, it is not understood what they have asked. They said how the entity will account. So how the entity will account means, can I say you need to give the information how it will be presented in financial statement. Means you need to prepare extract of balance sheet and extract of SOPL. Correct now. So how the entity will account, it means how it will be, how the information is presented in financial statement. How the information is presented in financial statement. Therefore, extract is required. Correct. Write down extract of balance sheet. Extract means part of balance sheet. So extract of balance sheet. So can you see we need to prepare balance sheet as on to date. One is 31st March 2005 and as on 31st March 2004 also. 31st March 2005 and 2004. Correct now. So first we write down asset. Under asset what we write? Non-current asset. Non-current asset. Till now we have not done the format. So whatever I am writing, that you just need to copy paste. Okay. Because you don't know the format right now. Under this what we write? Property, plant and equipment. Property, plant and equipment. Correct. So as on 31st March 2005, it was how much? 1,14,200. And as on 31st March 2004, it was 1,26,600. Correct? Yes, sir. Then we have one provision for DRSL that will come in the liability side of the balance sheet. So after giving what? Underline means what? Will not total it. Why will not total it? Because it's the extract, not the total balance. There is no need to total it. We write down equity and liability. Equity and liability. So now as per division to a balance sheet, first we write down asset, then we write down equity and liability. As per division 1, first you used to write on equity and liability, then asset. So ulta ho gaya. Understood? Correct. So equity and liability, can is a provision for DRS. It is a long-term liability, means it will come under the head non-current liability. Correct now? Are you getting whatever I am saying? But you can also write on one more point, other equity. Other equity means revaluation surplus. Other equity means revaluation surplus, because we have revaluation surplus also. So can you give me revaluation surplus as on 31st March 2004? So initially it was 15,600. Initially it was 15,600. Then it was adjusted with downward revaluation and decrease in liability. Can you give me this amount? How much is this amount? This is how much? 15,600. Then minus what? Minus 8980 plus what? 5,000. 11,620 now. 11,620. Correct. Then we write on non-current liability. Under non-current liability, there is one heading provision. So under provision, we write on what? Provision for DRSL. So what was the carrying amount of provision as on 31st March 2004? 11,600. Then it become what? 7,200. This become extract of balance sheet. Extract of balance sheet. This question, if asked in exam, will be minimum 12 marks. Minimum 12 marks. Maximum, I don't know. 12 marks question will be this. Correct. Then 6th, will prepare what? Extract of SOPL. So extract of SOPL will do for both the year 31st, for the year ended 31st March 2005 and 31st March 2004. Correct. So can you see we have expenses. Expenses. So there is one interest expense, means finance cost. Correct now. So can you give me the interest expense of fourth year? No, sorry, third year. Third year. Interest expense of third year you give me, okay? Third year. Fourth year we have calculated separately 600. Third year, can you give me? Depreciation. Third year interest expense how much? How much? It is 10,000, first 5%, then 5%, then 5%. So 10,000, 5%, then it is what? 551. Correct? So 5, let us make it 550. Chalega? Correct na? 550. And depreciation of third year is 3,000. And depreciation fourth year is 3420. 3420. Correct? So these are the information to be presented in PL part of SOPL. Then there is OCI also, other comprehensive income. Other comprehensive income. Correct na? Correct. So can you say under other comprehensive income we write on revaluation surplus. A revaluation surplus. So initially how much credited? It was 15,600. 15,600 created. Then we have done what? 2, means then there was 2 point. How much we have debited? 8980. Then created 5,000. So what is the net debit? Net debit is 3980. So OCI will be debited by 3980. In the fifth, fourth year OCI will be debited by 3980. Understood? Means OCI was debited by 8980 and OCI was also credited by 5000. The net effect is 3980. So it means minus what? 3980 minus 3980. This become what? OCI. Got it? This is the extract of SOPL. Have you understood? Correct. With this we completed this chapter. Now balance question you need to do it. All question I hope you will understand. Only some doubt may come that I left it for you, that you need to understand. Now this is a doubt. This we have not understood. If I will explain, then the doubt will never come. And that doubt will come before exam. That time I will be not with you. Correct. Now better you create doubt, you only score. Will take it, don't worry, but not now.